The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Tuesday morning, just after 9 a.m. Eastern time. Hope everyone had a great long weekend out there. Jumping back into the markets, we have markets red across the board, giving back some of the gains. We had some lofty prices on Friday, a little bit of a sell-off to end the week. But boy, you're talking about still some pretty lofty prices to put in context, folks. 44.44 on the S&Ps. We put it back on a daily, right? Well, you talk about an acceleration, man. I'm going to take this chart, drawing off there for a moment. And you're talking about a run basically from about 3,900. You back things up to March 20th, my birthday. There you go. And you run to 44.93. So, yeah, we've given back some of it, but it's almost a straight shot from May 24th. When we were trading at about 41.15, you trade up 380 points or so to almost 4,500. We're just under that price level. NASDAQ 100, how about it, right? Negative 19, pretty calm market, all things considering, right? You get the Dow now a negative 90. You get the Russell negative by 3. You jump over to crude. Crude negative by 72 pennies, trading at 71.18. You jump to gold. We got some action, man. Gold, we hit a high May 4th, 2085. Right now, we're down by $17 on the session on gold. You got to jump over to the dollar index when you see that type of action on gold. Dollar index, a little bit higher. That would make sense, right? 102.62. Not a huge dramatic move, though. When you look where we were on Monday, you look where we are, today. But that is going from where we were on Friday, right? So that's the discrepancy there, I believe. Let's go back to gold for a second. Yeah, gold was there on Monday as well. Nonetheless, pulling back quite the acceleration last week, right? You look at gold trading from 1936 up to 1980. We're back to 1953 right now. Just out of curiosity, let's see where we're coming back into. You're coming right into the 618 of that pullback on gold. Let's go a little bit further back. Yeah, so 1952 potentially. You take a look at the dollar index. They're doing the lawn outside the window if you can hear it. Maybe you can. Dollar index up to 102.64, and that drop off. And where do you start that one, right? Quite a drop-off from where we were on Thursday. Even if you look at the type of acceleration we're talking about there. The pullback back to about a 382. Let's see where we are. You go back a few days before that. Yeah, not even quite back to the 382, obviously. It's going to be an interesting week, man, as we come into the end of June. We're in summer, right? You got summer trading going on. We got a 4-day work week, which is always nice. We're coming into July 4th quicker than we realize, man. July 4th, 2 weeks from today, which is crazy how that's going to accelerate into that. And what is the holiday schedule like? Because I know this one snuck up for sure. In terms of July 4th this year, what do we got on the 3rd? Yeah, we got a half day on the 3rd is what it is. Yep, a half day on Monday, July 3rd. And then we're closed for the 4th. So, boy, that's like a 4-day weekend. I'm not sure we're going to be open on that Monday, man. Maybe we will. Maybe I'll have a program. Maybe I'll just Skype in from home because that is going to be a light day when you get July 3rd coming on a Monday, and that's less than 2 weeks. It's crazy how it rolls when you get Memorial Day, Juneteenth, July 4th. Lots of holidays. I like that. I can dig that, man, with the 3-day for sure. Let's jump over to notes and bonds as we start the 4-day week. 10-year, a little bit of volatility this morning. We're up to 113.10. This is a 10-minute chart I got there. Back to 113.02 on the 10-year. We jump over to the VIX, volatility index. Chopping around near the 14s. Friday, we end the week at 13.48. Now, interesting, right, that you ended the week Friday with that huge deceleration even towards the end of the day because the market sold off a little bit. But in the context of where we are and the volatility we're facing, a pretty historic week last week as the Fed pivots, they pause, and the market takes it and runs with it, man, to higher prices. Now, we'll see where we get in terms of some pretty lofty optimism built into this market. I mean, just look at the week we had, right? You're talking about 230 points from where we were last Thursday. Just gapping away on the weekend and trading higher all throughout the week to almost 4,500 in the S&P. Pretty remarkable. Let's see how some of the big dogs are trading. To kick off the week, we check out Apple. They're basically flat right now, slightly in the red at 184.50. They hit 187.50 to start Friday. 190 and change, somewhere like there, is where we're talking about for $3 trillion for Apple. We jump over to the number 2 company, Microsoft. They're going to be down about $1 on the open, up to $352 on Friday. They give up $10. Be careful chasing some of these equities, man. $10 just like that, 3% just like that. You got haircuts from where we were as of the open on Friday and almost the close on Thursday as well. We jump over to Google. Google, as I've been saying, different story on Google, right? You check out Google, you put it back on even a 5-year weekly to see in context of where we are. Only getting back about 618 of the full pullback we had. 152 down to 90. Google sitting at 125 in comparison to Apple, making new highs. In comparison to Microsoft, making new highs as well. Google, not quite the case. Amazon, not quite the case as well. Amazon only back to the 382 in terms of trading at 125.49. Now, it is remarkable, man, when you look at some of these equities, in terms of we've had the leaders, right, the likes of NVIDIA getting back the full pullback and then some. They were at 350 or so prior highs. What is that high? 347, something like that. 346.47. You're talking about 426. Even this morning, you got NVIDIA shares trading higher. Tesla shares on their pullback, not quite the same scenario, up to 260. This year alone, though, climbing from about 100. As in, you ever catch some of these dead dogs catch a bid, and maybe that's where the argument could be made for higher prices, man, because it's only those 7 equities, and I don't see Apple adding another $1 trillion in their market cap over the next 6 months. They may add some amount, but I don't think they're going to add another $1 trillion over 6 months, folks. That just is not how things are going to work right now. But what could happen is they might consolidate and you have some of those other companies pick up the slack. It's pretty remarkable where we go from there. You jump over to NVIDIA's competitor, a little bit of a different story. They got quite the acceleration as well, but nowhere near their all-time highs. AMD trading at 120. They're going to be basically flat for the morning right now. All right, let's check around some of the travel stocks. We'll pull it back to a 10-minute chart for this morning. You got Delta backing off a bit. Just jump around some of the equities as we come into this first break. You got United shares chopping around a bit. How about Disney? Just reading articles on Elemental. Not good news on Elemental. Their box office made like $200 million it took them to produce. And I think they took in something like $29-30 million on their opening, something like that. Tough story, man. And that comeback story may be a year or two away. They really got to start churning out some of their big hits, right? Star Wars, Marvel, stuff like that. Pixar. Not Elemental, that's for sure, man. Not getting it done. Disney right now down with the market at $91. Yeah, well off. You're talking about. You back it up on Disney. Highs at 203, sitting at 91, pushing the lows, and pretty remarkable when you look at some of these companies. And this would be the same argument, though. You know, there's room for a lot of equities here. You have Disney down at the COVID lows. Okay, so you know the Magnificent Seven or whatever they call it. I'd be real careful on some of those Magnificent Seven stocks. But some other equities out in the market, even the likes of Amazon, even the likes of Disney, etc., they turn it around the next year or two. They got some room, man, to the upside. All right, folks, stay tuned. We got live programming all day. Everyone's back after the long weekend. And we'll be talking to our man, I believe, Kevin Hincks, coming up right after the break. Stay tuned, folks.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. Welcome back, folks. We got the S&P futures negative by 10 right now. Markets in the red as we kick off Tuesday trading. To talk about it, let's jump over to our man, Kevin Hincks. Every trading day, folks, 12 noon Eastern time from the TD Ameritrade Network Fast Market right here on Tiger TV with your hosts, Kevin Hincks, Tom White. They have an outstanding lineup of guests. They walk you through hypothetical trade setups, folks, usually 3 trades in the hour, 12 noon Eastern time, all of them talking about options, all of them talking about defined risk. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Yep, a holiday-shortened week. Not a lot in terms of earnings, but we got a couple good ones. We'll get FedEx today after the bell. We'll get Winnebago before the open tomorrow morning. Those are the 2 stocks that we'll focus on today on Fast Market. We'll come up with a third one, probably correlated to one of those 2. But, yeah, FedEx and Winnebago will start off Fast Market, but, you know, make no mistake, Tommy, we are in the middle of summer. We don't have a lot of top-tier economic data, though we just get some really impressive housing starts and permits that just came out about a half hour ago. Really, the highlight of the week will probably be Jerome Powell talking before the House of Representatives on Wednesday and the Senate on Thursday. A lot of Fed speakers coming out tomorrow, 4, I count, but let's see how Jerome Powell gets in front of legislators and talks about his hawkish pause and what that means for overall inflation. Earnings are a bit light. Couple good names. Later in the week, we'll get Darden Restaurants. That's always a good one to look at. But, Tommy, we're in the middle of summer. Let's not overthink it.
You beat me to the question, as in, what do we focus on, Kevin? We're in the later part of June. We're 2 weeks out exactly from July 4th. I was just taking a look at the calendar, as in we got a half day of work on July 3rd with the market. Probably going to be a pretty light day, man. That's less than 2 weeks away. You got July 4th. It's almost a 4-day holiday the way it falls on there. and we're pretty far out from the Fed meeting. We do get a lot of speak, which will be interesting, as you were talking about. And what's in the way of this market is what I was going to say, and maybe it would be some potential Fed speak. But what are they going to say would be my question, Kevin. And I guess we're just talking a little big picture because we don't get a ton of economic data. As you said, FedEx out tonight. That'll be an interesting one. You always talk about they kind of wrap up the season, FedEx. But do you, as a trader, you got a VIX at 1430, I think the last time I checked on it, Kevin. What do you approach the next 6 weeks? Are we going to wait for that next Fed meeting? Are we going to wait for some Fed speak? Or what do you look for this market at some pretty lofty levels right now, near almost 4,500? We were at 4,493 on Friday. What do you think of this market, risk-reward-wise, as we approach that next Fed meeting? And it seems like we're going to get potentially another pause, or what are we going to get with the Fed? How do you approach this as a trader in summer trading?
Yeah, when you think about summer trading, the first thing that comes to your mind is less eyes on the market, less overall volumes, less number of traders, people taking more time off. And that, if you asked me right now, what will come first, 16 VIX or 12 VIX? I might say 12, Tommy, because the last 24 or 36 months, that level of VIX is not normal for this time of year. And can it go lower? Yes, it can. A lot of people are surprised by what the VIX has done, but I've seen too much, Tommy, to know that historically, if you go back more than 2 years, if you go back 10 or 15 years, you can see the VIX can go significantly lower than where we are right now, down around 12 or 11. So it all depends on if there's something out there on the horizon that causes some volatility. I mean, you've got markets opening down this morning, but they're lacking inertia on the upside, but they're lacking inertia on the downside as well, Tommy. So that means theta, and that means lower implied volatility, unless, as you know, I always say this, subject to change without notice if some event were to happen.
As always, but I appreciate, I know it's not an easy question. I'm even going to, I was struggling to get the question out, but you answered what I was asking, as in I feel a similar way, I think, in that there's not a lot to get in front of this market right now in terms of an acceleration to the downside that might cause that spike as we're into some summer trading. I'm already thinking about July 4th, Kevin. I already got plans coming up in September as well, right? We're in the summer. And I think we've been spoiled by the number of economic data points recently, and we might be in a little bit of a lull right now. Last question before I let you go. So we get a Fed meeting late next month. We're going to get a lot of Fed speak. I'm sure they'll tell us, or try to tell us, at least the market, what they're thinking as we go forward. Do you think, Kevin, that they're going to get enough data to really change and come back with another hike before that July meeting? Because I know as you go forward, this is my mind trying to process this, of course we can get enough data that they may eventually need to hike. But I've struggled with whether they can get that data even before the July meeting that things, and we know, listen, banking crisis came out of nowhere in 48 hours. So like you say, anything can happen. But there's not that much data. And the chairman got asked this as in, you're only going to get almost really June data because the meeting is late July. You're not going to get all that July data versus maybe 2 months. Do you think they're going to get enough data really to come back with a potential hike? How do you look at that scenario as we approach the next Fed meeting 5 weeks out right now?
Yeah. If you're Jerome Powell, you have to take the data that we got in the last group of top-tier data points, and you got to combine them with this one and see what the trends are. I mean, look at the housing starts we got today. 1.63 million housing starts, much stronger than expected. The housing market is starting to pick up again. Mortgage apps were up last week. Mortgage rates have stabilized, much like we talked about. So the housing is not going away. Jerome Powell talked about the wages part, that non-housing data, that's the sticky part of inflation. I think it's going to be real tricky here, Tommy. And the question is, does he have enough? They're going to talk hawkish. Right? We got 4 Fed speakers coming out tomorrow. They're all going to be talking hawkish. So that either does the trick. It looks like, here's something to think about for your viewers. The bond market believes Jerome Powell that they're still fighting inflation, right? Yields have inched higher, but not the stock market. They don't believe Powell. They think we're done. So that might be a little a little eye-opening moment when that happens. So the bond market seems to believe Jerome Powell is still fighting inflation. The stock market doesn't.
As a trader, it's so cool getting to think about this stuff big picture. My opinion is I don't know how they go that next meeting. And listen, this is just one man's opinion. Everyone's got an opinion, and people have been magnificently wrong over the last 2-3 years across the board. But it's pretty tough to rationalize with just, and listen, we start getting stuff like that. I had the article up as you were talking about the housing starts. Man, that housing market just so resilient, even with rates where they are. But if it was that close, maybe they should have hiked this time. I know many agree, there's a reasonable cases on the contrary. And maybe it's just a 2-meeting pause, Kevin, and maybe they wouldn't want to tell us that, right? Because that might really indicate that they might be done pausing. But boy, like you say, we get to find out, man. We get the data. And I appreciate the time, as always, on a busy morning, Kevin. We'll be watching Fast Market today at 12, and I look forward to talking to you tomorrow, as always, man.
Thanks for having me on, Tommy. Have a great day.
Always a pleasure. Folks, check it out. As he said, we're still in earnings season. They're going to be taking a look at FedEx. They'll be taking a look at Winnebago coming up on Fast Market at 12 o'clock today. I take a look at FedEx. FedEx, 233. Quite an acceleration to start off the year, but still well off the highs of 319 back there. S&P is off by about 15. Stay tuned, folks. We're coming back for the opening bell.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You got a little bit of a sell-off, but boy, you put things in context, right? That's a weekly, which really puts things in context in terms of the run-up we've had, the pullback, and the second run that we've had pushing 44.30 right now in the S&Ps. You're off by 0.5% in the S&Ps, okay? You're off by about 0.4% in the NASDAQ right now. You're off by 0.5% as well in the Dow. But all these huge accelerations. The Dow right now, you're within about 24 points of all-time highs on the Dow. You jump it back to the NASDAQ 100, you're only talking about 1,500 points. That's less than 10% from where we're trading at right now. And you back it up to the S&P, you're talking about less than 10% from all-time highs as well. That or thereabouts. You're pretty close to that price level. 48.08 highs that we began last year at, we're trading at 44.33. So yeah, you're negative by 20 points. But I would kind of agree with our man Kevin Hincks. If you had to peg one way or the other right now, really no reason. And listen, Fed speak could change things, okay? But it's going to have to be direct. And it didn't come direct with Chairman Powell in terms of the press conference talking about the next meeting. Where things really got out of whack last week, okay? Jumping back to the 10-minute, was actually on Thursday, okay? There's your Fed day volatility, okay? You start the day Thursday off pushing the lows of Wednesday on Fed day, right? What happened on Thursday? We had an ECB meeting on Thursday as well. You had Lagarde out there, okay? And Lagarde, they raised, that was somewhat expected, but the verbiage going forward, she was basically, I forget the exact words, but it was something to the tune of, yes, and we'll probably be raising in July. Powell didn't say that. And I think the market really picked up on the differences between Lagarde and Powell, the press conferences, and their commitment to future raises. And when paired with the statement that Powell had and the dot plots about potentially 2 hikes coming this year, if you were really confident you were going to go 2 this year, would you consider pausing for 2 meetings and then coming back? Well, you'd probably pause once and then be pretty committed to a hike, and then pause again, and then the second hike would be more dependent where we are 3 or 4 months down the line. I think the market didn't believe him, man, and I think they're probably right. And at least with this second meeting, maybe it's a 2-meeting pause and a reevaluation. Because if that's the case, all they have to do is pause for 1 more month, okay? And then they get 3 months of economic data, and they're back to fall trading. I'm going to pull up the Fed meeting schedule in 2023. And you're talking about their next meeting. So they just had their meeting June 14th. The next meeting is July 25th and 26th. And if they can push things out to September, that's September 20th. 3 months exactly from today. The July meeting, July 25th and 26th, yes, you're going to get a lot of data, okay, but the biggest economic data points of the month in terms of those monthly, whether it's non-farm payrolls, probably the most important one, right? Talking about jobs, talking about wages, talking about unemployment. Then you go to what? Retail sales, CPI, maybe the number 2, PCE, maybe the number 2 ahead of CPI right now. You only get those once a month, okay? CPI, PCE, retail sales, non-farm payrolls. We're only getting 1 more of each of those before their meeting in July. But if they push it to September, then we're going to get June numbers, July numbers, and August numbers before September. So that's where things get a lot more interesting in my mind. I don't know what the market's going to do in July in terms of that meeting. And as Kevin said, this is a data point, man. Let's talk about the housing because it's a big one. My friends are talking about it in our group chat this morning. They're successful individuals in a variety of fields, some of them finance, okay? But we always talk about the economy to a certain degree. And yeah, they're talking about this morning. They're talking about housing. And boy, it has held up well. Beginning construction jumped 21.7%, 1.63 million pace. May starts of single-family dwellings, the highest in 11 months. 1.63 million is the annualized rate. And look at the uptick, right? Housing starts surged to more than 1-year high. Jumped by the most since 2016. Crazy. Applications to build climbed 5.2% at 1.49 million units. Permits for one-family dwellings increased as well. Yeah, so we'll see where we go, man. But that's a data point, and that's a hot data point. Whether it actually contributes to inflation, that's a little bit of a different story, though. Not sure how that plays out in terms of, no matter what, right? It's a it's a strong market. They would not be building like that into a weak market, okay, which is not indicative of maybe the pullback that the Fed's looking for with a little bit of lag. The other side of that, though, is that you're building supply, right? So what happens when you build supply? You build supply, that should help ease the supply-demand constraint that's pushing prices higher. So it's kind of double-edged to see where that plays out. Nonetheless, man, things continue to hold up well. I just don't see how things change so much in the next 5 weeks. If you listen to Chairman Powell's press conference, if you listen to everybody talking about the lag, if you listen to the fact that it was unanimous, if there was no harm in doing it last week, is it really going to be the end of the world if they pause one more time in 5 weeks, folks? That's a reasonable argument. It's especially a reasonable argument if you think that pausing last week was okay. And they think pausing last week was okay, all right? I know there's many people out there that say, hey, man, inflation's crazy. What are you doing pausing? Let's get it under control. Let's bring the hammer. But that's not what they said. They said, we're going to pause. There's significant lag that's going to catch up. Inflation is indicating that it potentially is on its way down. They reiterated many times that 2% is their target. But boy, they paused. And so I don't see that happening unless there's a dramatic shift. We get some Fed speak. We get Chairman Powell in front of Congress on Wednesday. So boy, that will be an important moment to see what he says. But he's going to sound hawkish, folks. You can't pause and sound dovish, okay? So that's the part of the press conference that he was trying to sound as hawkish as he could without committing to anything they weren't ready to commit to, like saying that they're probably going to raise in July. He wasn't comfortable with that. Well, the market said then you're not that hawkish if you don't think you're coming back to raise in July. Because if you're pausing in June and you're not sure what you're going to do in July, that means you're really going to wait and see how things play out for a while. And yeah, the market figured it out. And on Thursday, it really took off when you had the ECB comparatively. But guess what? Where are we back to? Right before the Fed, man. 44.40 in the S&Ps, negative by 12. NASDAQ. Can't hold the NASDAQ down, man. Let's see what's plowing higher. It's got to be the big dogs, right? There it is. Apple. You can't hold Apple down, man. Up $1. That's a $16 billion jump in market cap. Pretty remarkable. Up $1 to 185.85 right now. You jump over to Microsoft. You trade in the NASDAQ. You better keep your eye on these two, man. They got such big weightings. Microsoft down 0.4%. You jump over to NVIDIA shares, trading higher by 1% as well. Tesla shares trading higher by 2% right now. It's the usual culprits, folks. Meta shares are flat. Jump over to Google, basically flat. We jump over to Amazon shares, up a bit, up 0.25%. All right, jumping around to this one, man. Sad story. If you saw the article out here, you got that underwater submersible with 5 people in there. One of them, wealthy billionaire. Seeing the headlines. Boy, it's pretty remarkable, man, to see how this goes down. I was watching a couple videos on this thing. Say some prayers for those people, though, because it's a tough one, man. They are well below the sea limit. You're talking about a couple miles below the sea. Just jumping into a submersible made by a private company, and unfortunately, things don't seem to be going well. So say some prayers for them, man. Sad story. We'll be back. Talk some markets, folks.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Excuse me. We got Amazon jumping higher prices right now, up by 0.5. You got the NASDAQ leading the way right now, up by about, 0.1%, I guess, but everything else in the red. Jump back to the story. So I'll put a link in the Tiger's Den to this tweet that one of my friends had shared in our group chat. And they was talking about that this company for the submerging vehicle, the submarine that went down to view the Titanic with 5 people. And this included the CEO and founder of the company, I believe, this OceanGate that was in there. It's supposed to carry people down to 4,000 meters. It can last for 96 hours. They built it themselves, OceanGate Expeditions. Among those is the chairman of Action Aviation, and that's the big dude who's getting a lot of press in here. But you got 5 people, no matter what, that are in there right now, and I believe I'm trying to find where it was their CEO. Nonetheless, I'll post a video that was up here, and so I'll give a quick glimpse of it right now. And this is a CBS story that aired a while back about the submarine that's now missing. It's a little bit lackadaisical, and it's a bummer in hindsight. And boy, if you're a billionaire, you better be doing your due diligence if you got the cost to do it, because it doesn't seem like I'd be strapping myself in one of these things. There's adventures and there's adventures, and it's just a bummer. It's a sad story because miles below the sea, that is a almost impossible rescue. And I'll post a link because you watch the minute video, folks, and I find myself saying, I don't think I'd jump on that thing. And somehow they got it done, collecting $250,000 per pop to get on there as well. So you talk about a conflict of interest of trying to close the sale versus making sure that everything is as safe as possible. All right, we jump to, speaking of as safe as possible, airplanes. Why not? Let's jump to Airbus and Boeing. You talk about some big numbers, man. Is it the Paris Air Show that's going on, right? I think so. Is that what they said in here? I think it was just Paris, right? Nonetheless, man, we are talking about some big numbers in planes and the backlog. Aircraft mega deals prompt bubble warning from industry vets. Everybody's got a self-serving idea in this article, though, folks, okay? So just look at some of the numbers. Yesterday, Indigo agreed to buy 500 Airbus SE jets. It's so remarkable how many airlines there are that many Americans aren't really familiar with in terms of European, Asian, stuff like that. I mean, we're familiar with the big airlines in America, of course. But, geez, you got some airlines, man, that are just loading up on planes. You got, 500 on Indigo, eclipsing a record set only months ago by Air India. Those add to the huge purchases by Ryanair and Saudi startup Riyadh Air earlier this year, announced deals 1,500 aircraft. Now, what's going to happen when all those aircrafts get in there? these are coming due like over the next 5 years, okay? They're not showing up today. So you're going to have this supply of airplanes coming. And this isn't really talking about domestic travel here, folks. You're talking about globally, okay? The CEO of Qatar Airways is out there saying, we have players flooding the market with a huge number of planes. I just hope they're doing this right. Now, he runs an airline himself, so he's going to be preaching his own book, whatever that may be, right? But, boy, you talk about some of the numbers, okay? It's herd mentality is one quote out there, okay? Not justified by the economics or reality, but everybody's got to get in line. Can you imagine trying to run a business where you need to order basically your entire supply of goods for your business 5 to 7 years out? Otherwise, you just won't be able to buy any goods to offer your customers in the service that you provide, which is flights. 737 MAX is largely sold out deep into 2028, not just the beginning of 2028. They're almost pushing 2029, and Airbus is only going to have a few delivery spots open before 2030. So there's a rush, man, and travel is huge right now. Is that going to last? Even if it does last, what is that supply going to do to some of these planes? The 500-jet Airbus purchase unveiled by Indigo yesterday extends the backlog at India's largest carrier to about 1,000 undelivered aircraft. That's what they have coming down the line, right? Crazy when you think about that. Yeah, so take that for what it's worth, man. And we're coming into hurricane season. Keep your fingers crossed for us in Florida, man, and everybody down that panhandle, especially the Gulf Coast. Tropical storm Brett forms in the Atlantic, headed for the Caribbean. Expected to grow into a hurricane later this week. Yeah, so interesting. I bring that up especially for humanity purposes, but that's where things get a little spicy, whether you're talking about crude, right? You're talking about natural gas. We get a little bit of a drop-off in crude going on, even the last couple hours. Look at that, man. Crude drops about $2 from where we were trading. 72.20. We're trading right now at 70.30. All right, what else we got going on? So Alibaba, they hand the reins. Jack Ma, he hands the reins off to one of his lieutenants in the market. Not so excited about that. Off about 3.9% right now. Alibaba. Daniel Zhang is stepping down and is going to be replaced by Eddie Wu, of one of Alibaba's co-founders. Yeah, and it's restructuring their business. That's following that. Let's see what else we going on for specific equities. All right, we got some action in the streamers. Warner Brothers Discovery, down 2.5%. Their movie, The Flash, took in an estimated $55 million during the 3-day weekend. Market was looking for $75 to $85 million. Going to be interesting to see how that plays out. And what I'm going to do, folks, I'll come back and I'll talk about, man, Disney. I was Disney bull for a long time. Longer term, that stock's going to do well. But, boy, you look at their slate of movies that they got coming up, it's not coming right now, man. I mean, the play might be to get in there ahead of the 2 Star Wars movies. Maybe a little bit ahead of that time. We'll talk about some of their timetable when we come back after the next break. But they are in the doldrums, and they have been missing out on movie theaters for some time. And it is tough to pull in a big movie at the theaters right now. You got to be like a sensational social hit, right? That captivates social media, encompasses all. Those are the movies that are going to crush it right now. I don't think The Flash is that. Did you even know The Flash was opening this weekend? I didn't. Did you? I mean, that's it. I mean, in the den. Were people aware that the movie The Flash was opening? I wasn't aware. Compare that to when you get some huge openings like, I mean, the next Star Wars that comes out, which I think is 2025. I'll pull that up, something like that. But you got 2 Star Wars coming down the line in the next couple of years, and they're going to be 6 or 7 months out from each other. Even if you go that far out, man, Disney's going to catch some multi-billion-dollar runs when they start pumping out those Star Wars. They start pumping out some of those back-end movies from the Marvel universe that they can. But Flash just isn't it, man. It's just interesting how some of those equities, right? What was the one? It was Ant-Man and the Wasp or whatever it is. What is that? That thing failed. Of course it failed. Well, what is going on with some of those flicks where they just try and trail off every single character they can? Carnival shares a bit higher, building on gains. Check it out. It was the best performer in the S&P 500 last week. Now, this speaks a little bit to what we're seeing in travel, man, right? Airlines, They're loading up planes because people just want to start traveling, and you're seeing it transition over to cruise ships, man. And you came into COVID at $50. You collapsed down to 10. You chop around at that level. It's amazing how many stocks traded higher and pulled back to the COVID lows. But you see, breaking out of that trend line channel, man. Carnival up another 1% today. Norwegian breaking out of their trend channel as well, sitting at $19. All right, folks, stay tuned. We'll come back. We'll talk a little bit of that Disney lineup. Why not? We'll talk about some Disney movies coming up. I'll give you those dates for Star Wars because, boy, the movie theater business, they need some hits, man. Not happening just yet. Stay tuned, folks. One more segment. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets in negative territory. S&P's negative by 17. NASDAQ rolls over a bit. You were higher. You roll back to negative prices. NASDAQ just gave off a quick 50 points like that. Pretty tame action. All things considered, though, we jump over to crude as you get a little bit of volatility. Crude at 70.34. We got gold with some volatilities to the downside, man. Down $27 at 19.44. You're pushing the lows of last Thursday. You jump over to the dollar index. Dollar index, not a huge move compared to the move in gold, right? Dollar index, yeah, you're higher, but nothing like the move you're getting in gold. 102.59 right now in the dollar index, and you jump over to yields. The 10-year, talking about higher price, lower yield. 10-year up by about 10 ticks at 113.11. So jumping back to Disney real quick. Okay, here's a good list of them. I'm going to pull this order over. I'm going to blow it up because it's important to look at this list, man. Even if you're a technical trader, okay, you can spice some fundamentals into things and know where you might have the wind at your back versus not. They got a ways to go until they start crushing movies again, man. Okay, a ways to go. Now, some of the movies, this is where they just reshuffled their lineup last week, I think, but things to take note of here. What movies do you have coming down the pipeline? Well, Captain America, that could be a big one. I'm not even a big Marvel guy, but I know Captain America, he catches some headlines, right? Well, they pushed him from May to July, so he's July of next year. He's about 1 year out, okay? The next one that jumps out at me is Deadpool 3. So he's about a year out as well. Those are the next movies that come in 2024. After that, you're talking about 2025. Now, there's many. The Amateur, Blade, Thunderbolts. Okay, you have an Alien movie. But they're not going to do Captain America numbers. They're not going to do Deadpool 3. I don't know how these movies are going to do. But the ones that really matter, in my opinion, okay, you push to Avatar 3, end of 2025, and 2 Disney movies, the middle of 2026 and the end of 2026. So from the end of 2025 to the end of 2026, we're pushing it out, but put it on your calendar, man. You're going to get an Avatar movie, and you're going to get 2 Disney movies, 2 Star Wars movies. We haven't had a Star Wars movie since 2019, I think. Yeah, and you're going to get 2 of them. So put those numbers, man. Those will be some big theater numbers probably as you push into that lineup. Folks, we got live programming all day. Everyone's back. Stay tuned. Basil Chapman's up next.